no one in the front row, so welcome, ladies and gentlemen. Thank you for coming along to Westpac Smarts this afternoon. The issue is going to be sustainability, and I'll just run through a bit of housekeeping if I may. For those of you who haven't been to events room 1, the escape's obviously out the back there, and we get together out in the little area out the back here. The toilets are quite a way. You go right around the atrium to the other side there. So today we have 3 people who are specialists in sustainability, and I'd like to invite Beith, who's Head of Environment from Forsyth Barr, Olaf Adam, who's Senior Manager of Sustainability and Community at Westpac, and Victoria Ashplant, who's just across the area here at PwC, who looks after global sustainability reporting and assurance. So we are going to be asking them a bunch of questions to speak on, and then at the end we'll end up with 15 minutes of Q&A so you can actually interrogate them as well. So the first question is, what does ESG and sustainability mean to business?
Yeah. Hi everyone, it's great to be here. I'm going to get the discussion going a little bit today with a bit of background on what ESG is. Hopefully I won't make all this. So ESG stands for Environmental, Social and Governance. And it's actually a term that's been around for 20 years. Couple of decades, but it's not overly familiar. I find it's not familiar to a lot of people. It feels new when you're talking about it, but it came around from a group of investors over in Europe who were recognising that environmental, social and corporate governance issues, when they're poorly managed or when they blow up, they become financial issues, and therefore they should be analysed like any traditional financial metric. And there was plenty of examples around that time in the early 2000s. Some of you might remember, sadly I do show my age, but the Typo and Enron corporate governance fraud scandals, which blew up due to poor corporate governance. And then we also had things like Nike and Gap with the child labour and their supply chain issues, and the amount of time that took to rebuild their brands and work through their supply chains and sort those issues out. And then we also had things like environmental degradation issues, and I think the BP Horizon disaster, which was obviously a bit later, but a great example of how poor mismanagement and a poor culture of safety and turned into an awful situation with human life, death, and a lot of environmental destruction. So that was sort of the genesis of ESG, recognising that these things can become financial issues if they're mismanaged. So ESG encompasses it's a very broad set of issues. In fact, it can really be how long is a piece of string. But under the E, you've got things like the carbon profile of a company, how a company manages its waste and water, how it ensures it's not negatively impacting biodiversity around its operations. Those are sort of some of the E issues that we talk about. Under the S, it's things like managing employees and surrounding communities. And under the G, things like corruption prevention, responsible tax management, adherence to good practice, corporate governance standards, there's a bit of cyber risk emerging in there, like those sorts of things. And to be fair, it can actually be anything. So it's a very, very broad agenda. But what we've seen over the sort of more recent years is as investors have been focused on them, companies have been talking about them more and more. And we're seeing it come through in disclosures, and we're seeing it come through in websites, a lot of information on how companies are managing these issues. And as investors have started using sustainability information, and I guess the way we've started using it is thinking about things from a risk-return perspective. How might these issues be a risk for some of the companies in our portfolios? How might they be an opportunity? Are there some new revenue streams from changing consumer demand? It's also a good way of giving a really good holistic lens on how companies are preparing for the transition to a more sustainable economy. And finally, we use information to make ethical decisions to align with client values and implement it through the portfolio that way. So that's a very short intro to what ESD is. From my perspective, it actually means different things to different people.
Anything else from the members of the panel?
Yeah, sure. Hi, nice to meet everyone. So I guess what does ESG mean to businesses? I think businesses are actually still trying to figure that out. But there's no denying that there are all those sort of externalities out there that Kate alluded to. It's investor demands, customer demands, changing workforce. And business leaders just probably need to think, well, what does this mean for us? And start having that kind of conversation in the room as a leadership team about how it does impact your business. And that's not an easy thing to do. And I guess you don't need to do it alone. There are advisors like banks and things and us that would help you. But just starting to get the ball rolling about how would climate impact our company? How would a social issue or something in our society impact our business? And as well as what it means for business, I think what we're seeing now is it's really important to think how your business impacts society. And particularly in Europe, there's a very strong concept of what's called double materiality, and that's a whole other topic and a definition in itself. But that concept of a business isn't just how things impact them, but our social license to operate and how do we impact society around us. And that has just as much impact, I think, on investors and stakeholders as the business itself. So I think sitting down and asking those two questions is a good place to start.
I think you can see the S of it, the social aspect of it, in the ports of Auckland, who apparently have lost their social licence to operate in Auckland, and the government and others are looking for alternatives for that industry. So social licence, as you just is quite important. What I'm going to ask the next question is, what is the emission reduction plan, and how would it affect my business or the businesses of people that are here?
I can go with this. Olaf Adam talking about. The emissions reduction plan is essentially the government's plan to deliver on the legislative and international promise that we've made as a country to keep our emissions in line with the Paris ambition, which is we're trying to keep global warming to 1.5 degrees or less. In simple terms, it means we've got to be carbon neutral as an economy in 2050, and that also means we need to halve our emissions, our net emissions, by 2030. So the way the legislative structure and the government structures have been set up in New Zealand under the Zero Carbon Act was to create an independent climate change commission which provided advice to government how it can deliver on that promise and on those international commitments. And the emissions reduction plan is the response from the government to the general public on what policy settings it intends to take and what it intends to do to ensure that this transition is indeed happening. It's a lengthy document, but it's an interesting one. It looks at the different industry segments and the different sectors and puts out some quite impactful policies. And why this is important to business is that it lays out very strongly the government's intent and the legislative direction of travel. And it helps the business to understand what is it going to look like in my industry to transition to that net zero economy. And that means, are there risks in me? Are there technological shifts that I need to be on top of? And also, are there opportunities for me, just as Katie said, that I could potentially leverage? For us as a bank, it really means to understand where our customer strategies are placed against this direction of travel. Because companies that fail to respond effectively to these megatrends, and it is a megatrend, this is a massive shift in the way the New Zealand economy will operate. Companies that fail to align their strategies to these developments will in some shape or form carry a risk, be that investing in the wrong assets that may become stranded, or be it missing out on an opportunity that may arise from them. So the emissions reduction plan really is sort of a kind of a blueprint that lays out how New Zealand is going to get there, and of course it's got some really interesting little pieces of legislation in there that may be relevant for very specific industries. So really worthwhile document to read.
Okay, and today the government, James Shaw, actually put out a table of actions the government will need to take and New Zealand industry will need to follow. So if you've got the time, I've just downloaded several pages of it. It's quite a lengthy document, but I think you need to have a good look at it. Next question we wanted to touch on is, how is sustainability transforming industries now? What are we seeing in terms of industries that are actually doing the market?
So I guess sustainability is one of those topics that really cuts across every aspect of a business, and I know in the reporting world we will often refer to it as non-financial. It's a non-financial type of reporting metric for carbon because it doesn't have that dollar value associated with it. But I think what is now quite clear is that what we might see through plans and from the government, various levers around how do we address this, carbon taxes, how does it impact the assets we have, does it start to impair some of the assets, and what impact does it have on our strategy and our ability to price for customers? There is a financial impact, and I think it's quite clear now that you need to be thinking about sustainability across the business as a way of creating value and using it to create opportunities. And there's a nice phrase that I think we talked about earlier, Olaf Adam, is it around risk mitigation or value at risk. So I think certainly in some cases it's not about creating value, but at least just protecting the value that's in your business already. So I think starting to see it across from a strategic or risk angle, first and foremost. Again, what does this mean to our business? Where do we need to build resilience, or where are there opportunities we can take? And then throughout the structure of an organisation, how do we start to think about our operating model, how we're set up to think about and act on environmental and social issues within making decisions in day-to-day business. And that's from, say, you in the supply chain, or the supply chain that you have. Who are you doing business with? And are they the right people to be doing business with you and with others? And it comes down to your workforce as well. So thinking about the migrating workforce and what kind of people want to work for your business. Are you an attractive business to the employees of today? And from there, again, thinking about reporting structures and how you measure and start to show progress on some of those strategic initiatives or plans or targets that you've set yourself. And there's a phrase that's come up a lot in this field, and it's what gets measured gets managed. And if you're not thinking about and getting the right KPIs and the right metrics to start to put some of these plans into action, then it won't happen, and all of that energy well spent is just a waste of money if you're not able to get it and embed it into your business.
Add on to that a bit as well, because I think my personal view that the transformation that is required has not really even started. And I think it's sort of, we've had the emissions reduction plan, or we had the national allocation plan yesterday, and there's big plans still that need to be implemented, and really we're at the beginning. But we do have a vision of what a sustainable world looks like, and I just thought I'd run quickly through one that the International Energy Agency, the IEA, published last year. It's called their Net Zero by 2050 pathway. And I'll just run through a few things in there because you start to get a vision of actually what's needed with this transition. So they make it clear, the IEA makes it really clear that to achieve this scenario, nothing less than a complete transformation of how we produce, transport and consume energy is needed. They've got over 400 actions in there, spanning across all sectors, and technologies for what needs to happen and when to transform the global economy from one dominated by fossil fuels to one powered predominantly by renewable energy. So this pathway, it requires huge amounts of investment, innovation, skillful policy design, technology deployment, infrastructure building, international cooperation. This is no small task. And I think one of the more notable milestones in the International Energy Agency, noting who's written this scenario, is that projects, beyond projects committed last year, 2021, there are no new oil and gas fields approved for deployment in this pathway, and no new coal mines or mine extensions required. So I think we're really at the beginning of this transformation. It's pretty radical what's needed to meet the challenge, and we've had plenty of planning and talking, and I think we're really at that stage now where we need to get our words into actions.
Maybe if I may expand on this a little bit, we had I recall a really interesting conversation where one of our senior executives asked one of our younger stakeholders that regularly talk to us, and he said, why is it that, why are young people expecting so much from this business? This is not our job, is it? And her response was, and she, by the way, she's got a PhD from Oxford, so she's quite intelligent. She said, we have learned that governments move very slowly, and we understand that governments can do certain things and can do them really well. But there are certain things that governments can't do, and moving at pace is not one of these things. And so because we are panicking, because we are worried, because we are scared, we're going to the one group that we know can move at pace if there is enough leverage and enough pressure. That's where we are looking at you, business. We know you can move, and we're asking you to do this. And what it made me reflect upon is really, a big shift that we've seen in the last couple of years is the expectations of the stakeholders that we have, not just our shareholders, but our stakeholders on business, have increased exponentially. They're asking more of us. And, and it's easy to sort of dismiss, Greta and young protesters, but they are the customers of the future. They are our future customers, so we can't ignore that. And what also is happening is, I think the other point, and this is probably, you might want to expand on this a little bit, but a realization internationally that these commitments that governments have made in Paris can actually be converted into litigation. And you can hold people to account to this. And if you say things that you're doing certain things, you can be enforced. This can be enforced in the court of law. And this is happening now. And so what we're also seeing, therefore, is that institutional investors have learned that the statutory duty to their investors is not just to maximize profit year on year, but that they actually have to meet the objectives of their investors. And if their investors are long-term investors, pension funds, for example, then they realize suddenly, well, actually, we need to ensure that we keep producing profits and returns in 20 and 30 years' time. That means we need to really shift the way we invest our money. And those factors, pressure from stakeholders, pressure from our future customers, and the statutory duties and the obligations for institutional investors, that's really what tipped the balance just in the last couple of years. And that pathway that you've described as a 1.5 pathway, that is quite equivalent to what I said earlier about the emissions reduction plan. This is an institution, a credible institution, saying this is the path, that's what 1.5 looks like. And everyone in that industry that's not on that line, misaligned, is facing some sort of financial risks. And this is what that is what the collective realization, particularly in the capital markets, is all about. This degree of misalignment, there is a financial risk in that somewhere. We need to find it, and we need to manage it. And if we can't manage it, then we have to eliminate it.
Anything more? I find it fascinating, the discussion on governments as well, because I recently saw what was happening in England, where they have transformed their energy economy from one that was very dependent on coal, and they expect by 2030 to be completely independent of fossil fuels, and will be a net exporter of renewable energy to the continent. And it's coming out of wind power off the North Sea and other technologies. So industry is actually adapting overseas to climate change and coming up with credible and financially viable responses to it.
And the UK government's an interesting example where I think a legal climate action group was taken to court again for not being able to show in their plan enough detail of exactly how they get to their net zero target. And now the government is rewriting the plan, and they won that case. It's a bit of a landmark case.
In New Zealand too, a group of lawyers actually have banded together and taken the Climate Change Commission. They do not believe that the pathway they've set out to 2050 is going to get us there. So we're still waiting the outcome of that decision.
So that leads quite nicely on to the next part of the next subject, which is what is the impact of sustainability on shareholder value? Not stakeholder, shareholder value in the future. Who would like to pick that one up?
And I guess really currently it's really difficult to quantify, but I think what we do know that the future is going to be very different from the past. We know that historical looking data, which we're used to relying on in the investment industry, may not necessarily be a very good predictor of what's going to happen in the future. Data is really important and it's evolving, but we are still making decisions now on data that's not necessarily as robust as it could be. So there's a few perverse outcomes coming through. I think auditors and assurance needs to evolve quite substantially. The traditional way of looking at a set of accounts doesn't necessarily fit the mould of what we need to report on going forward. And I also think that investors really need to transition from this fascination and focus on quarterly earnings to having a longer term view of what's required. And this means that sustainability has got to come into the heart of business strategies. And so we can have this lens on how companies are transforming and preparing themselves towards this digital, sustainable oriented future that we're heading towards.
So first, I think shareholder value becomes stakeholder value. So I think a business that is solely focused on maximising quarterly returns for the benefit of its shareholders is missing a trick, because there's a lot more people interested in your business and a lot more people that can influence your business than just your shareholders and your immediate customers. So you have to think about my current customers, you have to think about my future customers, you have to think about the people that create the legislation that you operate under, and you need to think about the people that vote for the people that create the legislation that you operate under. So you just have to, as a starting point, I think you have to really, businesses really have to think a lot broader about who they're actually there for. The other bit I think is sort of a bit of an episode that I've observed. I shared it with you earlier, which was a panel discussion very similar to this one with 3 different representatives from the agricultural and food sector. And one of the representatives of one industry was bemoaning the fact that they know that they need to produce sustainable products, but they just don't see getting the margin benefits, or they're not getting the extra premiums out of their overseas customers for that. And to which the next representative said, that's exactly the point. This is not something that people unnecessarily want to pay more for. They're expecting it from you. To which the last person said, well, this is not about value add, mate. This is about value at risk. So if you're thinking about who your customers are and what is important to them, then you don't just need to wonder, am I going to be able to get more out of it for a sustainable product, which in many instances you may well do. So there is genuinely an opportunity there. But you also have to ask yourself, am I going to be able to continue serving these customers and selling my products to them, or am I running the risk here that at some point, if I don't deliver to all of their objectives, to all the things that are important to them, that I'm running out of customers that I can serve? And I think that's something that I think often gets lost in the conversation. And I know, a really good example here is, with our European counterparts, the border adjustment mechanisms. Europe is thinking about putting up additional trade tariffs on countries that they feel are not aligned with that 1.5 net zero pathway. So actually maintaining access to markets is almost more critical for New Zealand than it actually is to simply trying to get more for your products.
Echo all of that, and I thought in the room I imagine we talk a lot about investors and investor grade information and listed companies, but the sentiment is there for private equity too, and we can see that in deals, and as we look ahead and you're thinking exit plans in 3, 5, 10 years time for my business, or what sort of legacy business I'm leaving to my family if you're in the family-owned business, and that next generation of business owner or private equity buyer that's coming on in 3, 5 years time will be looking at your company and thinking, is this a sustainable company? Will it provide value in this new future where we have different regulations, where environment and social aspects are under scrutiny? So if you don't think it applies to you, I guess it's ignore it with peril, perhaps.
So that segues quite nicely into the final subject, which is the reputational risk or otherwise of greenwashing. Who wants to pick up on that? Because greenwashing is quite topical right at the moment.
Yeah, I'm happy to. It's quite close to my heart with from a reporting space, and I think users of reported information and sustainability reports and the information you put out there, they want to see how you're measuring up to claims and targets and progress on those targets that you've made. And they want to hear the whole story. They don't just want to hear the good news or what you think they want to hear. They want to hear the real story. And that's the good and it's the bad, and about balancing that reporting with some equilibrium. And I'd say we're in a bit of a safe space at the moment, or a space where a lot of businesses are learning, the market's learning. We all appreciate the information. It's hard to get and it's hard to report. So starting to put some information out there, and at least if it's a story you'll feel uncomfortable telling, or you think it's bad news, at least with that, well, what am I doing about it? And I think the market's ready to hear that, and they're accepting of it as long as you have that plan, or you back it up with your own narrative and your own story, and tell that story of how you're going to get to where you want to be. And if users can see that, and you tell it with some authenticity, then they'll trust that information. If you are probably in a position where you're cherry picking the best bits, or you're telling the good story but not the bad, and then you get, I guess, found out, or if stories start to unravel, that's when we start to see this greenwashing, and that's when you start to get exposed for litigation risk, as we discussed earlier. And you start to then lose credibility and trust pretty quickly in the market. So I think understanding what your story is, the data's the data, but wrap it up in your strategy of how you're getting where you need to be. It's really important.
I think to me it's a bit like, everybody in this room has probably at some point in their professional life been subject to an audit. So you've got the auditors coming in, and you've got a choice. If you know that something isn't quite right, you've got a choice to try to cover it up and hope you get away with it, or you play the bat straight and you go, okay, here are my issues. Ideally, you have already done that before, but at least, if you get asked, you've got to be honest about it, and that does give you a degree of credibility, and it will also kind of relieve you a little bit emotionally, but I think you're in a much better space because you get some credibility from it. And I think integrity and credibility is a new, it's kind of the new currency that you trade with. Again, think about not just your shareholders, think about your stakeholders. So So greenwashing kind of fits in that. You know, on the positive, it is a real opportunity if you're genuinely honest and you're transparent about the pros and cons and the challenges that you face. You create credibility, which comes with trust, which will give you know, stakeholders good reasons to interact with you in a positive way. On the downside, the litigation risk is real. We're seeing some very, very interesting cases in Europe. And one of the more interesting developments here is that we're seeing a lot more funding pathways for litigation being pursued against companies and governments. And we're seeing a lot of litigation finance in Europe. There are professional litigation funds that pick some good topics, find someone that will take a case, and they will fund that. And they don't just fund these cases with the aim to necessarily succeed, but they fund cases, litigation, to see what could stick, to get a really interesting ruling, and they can work out from that ruling what might stick next time. And this is kind of what's playing out in Europe and the United States to a degree, and these sorts of pathways becoming increasingly accessible in New Zealand as well. So the best protection against that is to be very transparent and genuine about the things that you do and that you talk about publicly.
So that would apply to your supply chain. So obviously supply chains are globally quite chaotic at the moment. So I would imagine that firms that have supply chains from around the world coming to New Zealand would have to actually audit those supply chains fairly rigorously.
Yeah, that's right. And the new disclosure standards coming in, the kind of disclosure standards in New Zealand are really pushing companies to talk about what's happening in their supply chain. Scope 3 emissions is the third one. So I just wanted to add on the topic of greenwashing from an investment perspective and what's been happening in our industry, because the FMA, the Financial Markets Authority, is very focused on investment products at the moment and what they're saying on the label and what that means to those investing in the funds. And just stepping back a little bit from it, I think, as I originally started out with, and ESG kind of that term started first being used in the early 2000s, it was about understanding at that point how these issues became financial risks for your investments. And what has happened over the years is that it started off as something quite niche, but then it gained a lot of traction. People became interested in it. Funds started flowing. Fund managers jumped on the bandwagon, started relabeling products, while maybe not necessarily actually changing what was in them. And suddenly we had something that was something quite peripheral. It was legitimized. Money flowed, people changed, and what's happened now is we've got this sort of kind of difference in expectation from those that are investing in these products versus the fund managers and how they've labelled things, and it's not matching up. But we're also seeing that a lot of people jumped on the bandwagon and not enough change was made. And so I think, rightly so, we're getting this criticism in the industry, and I think this spotlight is really important. And it will be it's an excellent opportunity. Well, one, I think it's also the industry's maturing. It's a sign that the industry's maturing, but as Olaf said, it's also an opportunity to reset and do things really well, to talk about really the outcomes that all of this work is having and all this effort that you're putting into something, like really what's the outcome having. And so I think it's a great thing, but it's a very hot topic at the moment, but it's great to see the FMA is very focused on it.
So that pretty much wraps up the questions the panel were going to kick off with, but is there anything each of the individual panelists would like to say as a summary before we get into a Q&A?
Yeah, happy. I think probably the key takeaway, I think, for anyone in the room would be if you haven't started, then get started. Just start thinking about what does this mean for our business, what does it mean to our employees, to our stakeholders, and I think start the conversation in the leadership team and start to get some alignment. And I think sometimes that's a hard ask in itself. Until you sort of put those values on the table, the leadership team doesn't necessarily know where it all lands. And some of those have some bigger questions around where you're going in the future and where you take your strategy. So that might be a good place to start.
I think I probably want to add to that. I totally agree, and I think for fear of sounding a bit too negative, but I think there is a genuine opportunity in all of this, and one of the things that we notice is in sustainability lies a little purpose, and purpose attracts talent. Purpose attracts customers, attracts talent to your company, and I think for those that haven't gone on that journey already or haven't really thought about this in great depth, they may find themselves surprised by the things that really drive the people that run and make their business successful. There's some real opportunity in finding a real purpose that your business is about, and then bring your company with it. I think it makes it a much more fun place to work, and so I think
And I'll just add, I think this is a really complicated topic. We do not have all the answers. It's not something that can happen overnight, and we need to accept that, acknowledge it, and in the conversations that we have, be it with clients or whoever, we need to be very open and honest and transparent about where we're at, what can really be achieved, and set some longer term plans and work towards getting there, because it's not a quick overnight thing.
On the basis of that, now it's thrown over to the audience at Q&A. Any questions you'd like to ask of the panellists? And we've got a roving mic here if you would like to. Question down there.
Hi. You mentioned that it's a complicated topic, and you're right, you guys have done an awesome job explaining it and taking us through a few things. One of my questions is more for our small businesses and their supply chain, and what do you think the impact is going to be on them, but also what do you envisage their, where they get their support network from?
Yeah, a couple of things. For maybe some of the impact, so you might not be at the forefront of the legislative requirements or the regulatory changes that come through, at least not straight away. But often those small businesses might be part of the value chain that feeds into a bigger business, and eventually you might sell into one of the larger New Zealand corporates or offshore somewhere. And as we were talking about earlier, some of the disclosure requirements coming out require those companies to report on their carbon emissions across their whole value chain, and at the moment actually have them audited. So there'll be some impetus on these companies to contact the ones lower in the chain and across New Zealand to ask them, what are your carbon emissions, because they form part of my business. So you might be impacted indirectly through mechanisms like that. From the opportunity side of things, we talked a little bit about how is the government reacting to how they need to get where they need to be for 2050 net zero, and some of the levers they use on the downside and the cost side, whether it's sort of carbon taxes and carbon pricing. But on the plus side, there's likely to be subsidies or opportunities to access funding in order to invest in sort of beneficial climate-reducing technologies. So I think people watch of where that's going, because it might open up some really good opportunities for small businesses. There's some tools that have recently come out. I think the Climate Action Toolbox is one, which was I think the Sustainable Business Network and sponsored by Envy and some other organisations. But that's quite a nice place to start for creating a sort of small business plan and also helping a small company calculate carbon emissions, because where on earth do you start with that? So that might be a nice tool for small businesses to try as well.
Yeah, agree with all of this. Another way, I guess, to look at this. So this is very much about the hard numbers and the hard facts. But I think stories are just as important, particularly for smaller business. I hear a lot today here from you and from my colleagues about the challenges in attracting staff. And, then staff might not, a potential employee might not look at your carbon emissions statement, but a future employee will want to hear from you, from the business. What are you about? What am I going to sign myself up? I'm going to spend 8 hours a day with you. I'm going to get paid. That's nice. But I actually want to have a bigger purpose because I want to go home tonight and I want to tell my kids that I've done some good stuff. So it's actually really important not just to have, the hard reporting tools and the numbers at hand, but actually also having a story, and a credible story, back to greenwashing, a credible story about what I'm actually going to do. What is my contribution to my community, to climate, to whatever issue I think is really important to my business. And so I think and the same applies to customers, of course, as well. So it's actually not just having the numbers, but also having the stories and the plan that credibly goes with that. And I think that's particularly important for smaller businesses that are also part of their community. They're very visible, they're always there, right? And so it's really important to have these things ready because it does matter. It does matter to people.
I think you've got the why, but one other thing on the why is some of the things that I've sort of seen over my work experience when looking at either VC or early stage private equity, and it always used to be a difficult conversation to have with the founders or the CEO around ESG. It was don't talk to me about that, I'm just trying to keep my business afloat. And that conversation has changed over the years and I think it's driven by a new generation coming through who do not accept that anymore. And it's like, if you start measuring your carbon emissions from day one of business operations and make it just business as usual, it's harder for us that are established that need to adjust, but I think that's the mindset coming through. Innovation is really key. I had a very interesting conversation with someone earlier this week who's trying to get a lending platform for farmers off the ground in an area that banks won't lend, which is solely focused on transitioning farms to a more regenerative agriculture style. That sort of innovation is starting to happen. And I think the third point I'll make is around collaboration. And I mean, there are so many resources available now. There's hundreds. Actually, the problem is not finding it's where to start and how to filter through and find the good ones. But I think we're at the stage where the leaders in the big end of town are doing some really good things, and they're willing to share for others to learn, and getting involved in networks, being part of collaborations with all that sort of shared learning can be very helpful. I don't think anyone, being a fast follower in this space is absolutely fine. You don't have to be, bleeding edge leading.
Any further questions? John?
As bankers, one of the things we do is assess risk in the business and also get an understanding of what management and leadership team strategies are for mitigation of those risks. So in the context of sustainability, we're looking at our customers' sustainability reports and talking to senior leadership in terms of what they're doing with their business. What sort of tips can you give us in terms of actually sort of getting to the crux of it?
You can ask me all the time.
Yeah, sure. I think what we're seeing with some of our clients is the challenge of how do I get something like a climate risk or a social risk into my risk register. How do I get it at the board table when we start talking about what this risk actually means for our business? And you might have your own ideas on how to do that. Sometimes facilitating and using a facilitator or just yourselves, starting to put impact pathways. So if we do see, temperature rises, or if these assets that are close to the coast at risk of sea level rise, what would that mean for those assets? What would I do next? And you might not have all the answers, but starting to piece together that story, and you start to build up a picture of how it would impact the business. And I think being able to take it those few steps further and actually build it up into something that's sort of meaningful for the business rather than climate risk on the risk agenda and a tick. We thought about that and then we move it on to next month of the agenda. As I said, sometimes you need some help thinking through those. We talked about IEA or there's scenarios out there. There's so much data around that says, what if the sea level rose? Where would it rise in New Zealand? I don't even know if it would affect my assets. And there's tools out there that you can play around with, and there's scenarios out there. But there's a lot of them, and they're complex, and until you've seen them, they're hard to use. So there are people out there able to help, and I think don't be afraid to contact advisors or contact, because I said, we talked about like banks are looking at this too, or insurers are looking at your business and also probably thinking the same questions. So certainly collaborating and doing it together might be a great way to start.
Yeah, and I would starting off the sustainability journey is hard. It's a huge agenda. Where do I even start? And I would, it can be a very emotive conversation, and it can be very polarizing as well. In my experience, having a third-party consultant just to help you with those early conversations is really helpful. Especially they can bring those hard conversations out as well in a neutral way. So that's a really helpful way to start. I think the other thing, in New Zealand, talking about the changes that the UK has made, we didn't start with a whole lot of nuclear and coal-fired power stations. So we're at a different starting point, and it's actually pretty hard to make the amount of change that England has, because we're starting from a different base. And so some of the conversations that I'm having at the moment are around, is it right for New Zealand to tick the same boxes that's of what's happening internationally? Do we need a policy in biodiversity? Do we need a policy in human rights? Do we need a policy around labour? And yes, they're good practice, but in New Zealand, are they really going to shift the dial that we need to? So it's some of those conversations about really thinking through your business, your operations, where your biggest impact is, and what's going to shift the dial. And thinking about, do we get out of the mold that's expected of us and do something real? Those are really interesting conversations to have. I don't have the answers, but that's kind of the things that we're talking about at the moment.
I'll take one more question. If not, I'll sum it up if that's all right. From the Chamber's perspective, we've started the journey ourselves. We've engaged an outside consultant to give us guidance on the journey. If any of the small businesses here would like to understand that, catch up with Liam afterwards. We see that it's something that's got to be started. We'll find out the rocks in the pathway, the easy bits as well. So the Chamber's here to give you some guidance as well. So thank you very much. I would very much like to thank the panel for coming down, making the time to actually start a discussion within the Chamber membership on sustainability. It's certainly going to be a big thing over the next decade, and really appreciate you all coming, and thank you very much. Thanks, Katie. Victoria, really appreciate it. Ladies and gentlemen, I think we've got something for them as well, have we?
Yes.
There's a little present from the Chamber, so thank you very much. Ladies and gentlemen, thank you for coming along. We really appreciate it. And I'd have to say a big thank you to Westpac, who have set up this Westpac Smarts series that we do. It's been excellent, and it's a difficult conversation with regard to sustainability, so good on them for having the courage to actually kick it off. So thank you.